I'm going to give you my entire trading strategy for free. I've been trading this strategy of supply and demand for over 12 years. It is proven to work in all time frames in all markets. Whether you're going the prop firm route or you want to grow your own small account or trade your own account, this stuff definitely works. So I'm going to break down everything about the supply and demand trading strategy, the basics, advanced theory, how to identify and draw zones, multiple time frame confirmation, trends, take profit, trade management. This is everything that you need to know in order to become a profitable trader. I appreciate if you guys like this video, subscribe, and if you have any questions, reach out to me on social media at MoneyballAustin. I'm also going to be breaking down this book for you that we're going to be following along as we go through each lesson. So if you want to get this book, the link to this will be in the description of this video so that you can get your own copy there. Okay, before I start this, I just need to crack a beer really quickly because it's a long video. It's just me going to be talking, so I need a quick refresher. If you want to grab yourself a beer, maybe some tea or water, feel free to do that. All right? I'm just having a nice ice cold Modelo. I'm here in Mexico, just enjoying myself right now. All right, let's get into it. Okay, this is going to be nothing but good stuff. I don't like throwing in 100 cuts into these videos. I don't like throwing up subtitles to get, draw attention to little-minded children that can't focus on a video for 5 seconds. If that's you, that you can't do that, then this isn't a video for you. But if you're looking to take your trading serious, you're in the right place. So let's get into it. The first thing that you need to understand is that there is no best trading strategy. Supply and demand is just one trading strategy out there. Okay, what's important is that you find a strategy that makes sense for you and that you master it. Okay, you can mix and match this strategy with different strategies, indicators, and all that type of stuff. That's fine. But what's important is that you just focus directly on one, and I'm going to bring you through everything. So the whole concept of supply and demand, as we see here in this book, the whole concept that you need to understand of what the supply and demand trading strategy is that we are trying to identify where the big money is coming into the market. We understand that institutions run the markets. They are the ones creating these gigantic moves in the market to the downside or to the upside. Okay, so what we're trying to do as supply and demand traders is we're trying to identify where they are previously buying or selling at and trade with them once we see them stepping into the market. That is the whole concept of supply and demand. Okay, is we are trying to identify where the big money is buying and selling at, because we understand they make money year after year and retail traders lose money year after year. So what we're trying to do with this strategy is to identify where the big money is buying and selling at and trade with them. Okay, that's just bottom line what supply and demand is. Now we can identify where the big money is coming into the markets with these 4 patterns. Okay, these are the 4 patterns that you are going to master trading this strategy. Okay, so let me take a picture. These are the 4 patterns. We have the 2 supply zones. This is where we have a rally base drop and a drop base drop. We're going to talk more about that in a minute. And then the 2 demand patterns are going to be a drop base rally and a rally base rally. Those are the 2 demand patterns. Okay, so we're going to go to a chart and I'm going to explain to you how to identify them and draw them out. And you're going to notice that these patterns all have in common is a base, the supply patterns and the demand patterns. Base, 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 base. Okay, so we want to find the area of the base and draw out our supply and demand patterns. So what we are looking for on a chart, once again, this is for all time frame sequences. We're going to go to different time frames, but we are here on the 4-hour time frame. This is the area of supply. Notice how the base consists of 50% candles. What is a 50% candle? It's when the open and the high-low close of the candlestick is less than 50% of the total move. I'll show you in this book right here. So you have these candlesticks that are like 50% of the total move. The open and the high-low close is less than 50%. That is a base candlestick. This is where the origin of the supplier demand zone originated from, right? So what we're trying to do is identify that base and draw out our proximal lines and our distal lines. We're trying to highlight the base. And the best way for me to explain this is same thing with here. You can see it right here. We have the rally, base, 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 then rally. Okay, if we're going to be highlighting the base, think of it of like a king's tent, an army base camp. You have the king's tent, you have the armory, you have where the soldiers sleep, you have the chow hall, and so on and so on. What we're trying to not do is we're not trying to highlight one area and say that is the base. No, we're trying to find the base and highlight the overall base. And that's what we're trying to do. We are trying to mark out the general base of where, the supply or demand zone is. And something you're going to notice about this is that all these imbalances to the downside are going to be very strong. Notice how strong these candlesticks left this area. That's what we want as supply and demand traders. That tells me a lot of sellers stepped into the market. So if and when prices ever return back into this area, I want to be looking for selling opportunities. Very, very important. Strong imbalance going over 2 to 1. Notice how you have this grinding down over here. See, guys, see? That's not supply. Maybe on a smaller time frame, but this is prices just grinding down. This is where a lot more sell orders stepped into the market. So that's why I'm drawing the base out here. So that is our supply pattern. If we want to find demand, well, same thing. It's always going to be below price and to the left. And we also have demand down in here. This is our drop-based rally demand zone right down here. Okay? We have the drop, base, rally. So you'll notice drop, base, 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 base. Very strong rally, guys. Very strong rally. You need that in your trading. So those are our supply and demand zones on this chart. You could go down to a 1 hour and you could start drawing out these zones. You could say, hey, here is supply right here. Here is supply right here. And here is supply probably up at the top 50% of that area. Okay? So that's really what we're trying to do, is identify where the big imbalance candlesticks are. These gigantic moves to the downside or to the upside. That's what we want to be marking out. Where did that originate from on a chart? Same thing here, very strong imbalance, right? So those are our supply zones. You could even go back here and say, well, here is supply. Here is supply, right? We're trying to mark out the general areas of where a large stack of buyers or sellers stepped into the market. Let's look at one more example, because this is a very important concept to understand. Because now we're going to start talking about, what's a good zone, okay? Because you're going to go to a chart and you're going to be like, I see supply and demand zones everywhere, right? Just a quick refresher, demand patterns right here so that you guys can see we have the drop, base, 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 very strong rally, right? Same thing with this pattern, same thing down here, here, here. And for supply, it's the exact same, but reversed. Strong imbalance, you have the base. You have the base imbalance, right? And so what we're trying to do is, like over here, is we're trying to highlight the general base of where it originated from. So these supply and demand patterns, look how strong that imbalance is. We want to draw our zone where the base is and where the imbalance originated from, okay? So when we go to a chart, talking about quality zones, okay? Because you might go to a chart and you might say, well, we got supply here, we got demand here, we have demand here. No, we want to make sure that these zones are actually accomplishing something, right? And so when I do this, let's look at back testing and journaling. You can see how important it is to determine high quality trade setups. These are people's trading stats. Good zones, 12 winners, 5 losers, versus when he's trading a poor zone, 3 winners, 6 losers. Let's look at another trader, okay? Quality zone, 19 winners, 3 losers. Poor, 1 winner, 6 losers. Let's look at another trader, okay? This trader, quality, 14 winners, 3 losses, 2 winners, 3 losses when he's trading a poor zone. So it's extremely important that we know how to identify a quality zone, okay? So how do you identify a quality zone? Okay, well, it is here in this book here for you, once again in the description of this video. But I want you to focus in on what these zones are accomplishing. And a good zone, as you can see here, is going to have a strong imbalance that moves at least 2 times the size of the base. If there is a strong imbalance between buyers and sellers, we're going to see prices move in a very strong fashion, not in a slow grinding fashion. We're also going to see maybe price breaking trend lines or removing opposing zones. Okay, this makes a quality zone, and it's going to come much more important when we talk about the top-down analysis. So when I look at this zone down here, right, we have a demand zone down here. You guys see that? Right, we have a demand zone down here, but we also have a demand zone up here and up here as well. All right, but what did these zones accomplish? This rally-based rally, strong rally up to the upside, but it blew through this opposing supply zone and it broke downward trend line. This is a much better zone than this zone down here, because this zone didn't accomplish anything. It just has an imbalance, but it didn't really do anything, right? This is like you having a business and then, you know, say these zones come to you with their resume and they come out with all these things that they accomplished. I blew through trend lines, I remove opposing zones, I'm at all-time highs, right? You're reading its resume and you're like, wow, this is a good zone, right? And then the next guy comes in and he's like, yeah, I just look like a demand pattern, right? Well, it's like you're going to hire the good zone, and that's what you're trying to do as a trader, right? You want to make sure that you're trading at these good zones, okay? So you're making sure that these zones actually accomplish something, right? So let's get into this. You might be thinking like, hey, well, what about this zone up here, right? Didn't really do anything. It's got an imbalance, but it didn't really take out lows. It didn't break trend lines or anything like that. Maybe on a smaller time frame, maybe it's a zone, but on this time frame, no, it's not an interesting zone, right? It's like if we went back to that US 30, I think there were a couple examples. Honestly, we could go back to that book and actually look at this. So if we are going to talk about quality zones, like if we looked at this supply zone, look what this zone is accomplishing. It's accomplishing nothing. Rally-based drop. It's a supply zone, but it didn't accomplish anything, right? Versus this zone over here, this drop-based drop, it's actually taking out structure to the left, and it has a much better imbalance. I would much rather trade at this zone, right, rather than this zone up here. You see what I mean? So it's important that we, have a proper understanding of how to identify good quality zones, okay? And this is going to come full circle, right? So what we're trying to do is we're trying to identify on a chart where these previous big buyers or sellers stepped into the market. And then once prices return back into these areas, we then want to be looking for buying or selling opportunities, right? It's because we don't just buy and sell at every single one of these zones. If we go back to that CAD chart, I think it was a 1 hour time frame, we don't just buy straight up, right? And we're going to talk about this in lesson 3 when we talk about the whole setup. But that's how you're going to do it. Whatever time frame you're looking at, whatever market. Let's look at crude oil, for example, and I don't know, you want to pop to a 4 hour time frame? Okay, well, start asking yourself this question. What did this supply zone accomplish? It took out this opposing zone with these imbalance candlesticks. It's broken upward momentum line, right? Versus this zone down here, well, it didn't do anything. It didn't take out highs. It didn't break downward momentum line, right? I would much rather be trading at a zone like this if prices come back up into there, right? And as I showed you before, looking at those stats, it's so important to identify quality zones, okay? Very important. All right, let's talk about trends and multiple time frame confirmation. So let's go to, let me take a quick breather, to be honest. I'm getting upset now. You can see blood pressure starts rising. I'm starting to hammer in onto this stuff. There's a lot of knowledge up in this brain, I must say. And in order for me to deliver it, I got to make sure I give you everything, but it's a lot. I understand that, but this is trading. It's not as simple as just drawing trend lines on a chart and following an algorithm. If you thought it was that easy, then everyone would be profitable. Oh, I'm just going to follow this guy's EA and his signals. I cracked myself up. Okay, I love it. Okay, all right, jokes aside. Let's talk about trends. Trends and confirmation. Most importantly, this was like, the light bulb moment to me. All right, and we're gonna recap this really quickly. Before we do that, we're gonna talk about trends and confirmation. Okay, so we're gonna do this and then we'll recap. So trends and confirmation, it's very important that people understand trends, but don't overcomplicate it here, okay? You know what? Because there's a million different ways to determine trend, what's important is that you are consistent with this approach of how you determine trend. How do you determine an uptrend versus downtrend versus sideways market? Now, I could talk about this for an hour straight on how to do it and 100 examples. I'm trying to do this under in 1 hour, but I want you to keep it really simple. And now, the way that I personally do it is here in that book that I'm going to be sending you, once again in the description below, right? But keep it really simple. Are we making higher highs and higher lows? Does it look like an uptrend? All right, just ask yourself, like, is it in a downtrend? Is it clearly going down? Then it's in a downtrend. Is it clearly going up? Then it's in an uptrend. And if you ever look at a chart and you're like, I don't know what the trend is, it's probably sideways. So let me ask you this. What do you think the trend is here on this time frame? What do you think the trend is? It's in an uptrend, okay? What do you think the trend is here on this one? It's in a downtrend. What about this one? Maybe sideways. Some people might say down, right? Depending on how much value you're putting on, you know, overall from like over here versus over here, right? This is something I see people do is they scroll in so much. I'm like, what the hell are you doing? Scroll out of your chart, guys. Scroll out of your chart, okay? Scroll out and get a better perspective of what's happening in life, okay? So yeah, sideways market. Let's go to another one. What do you think this trend is? Down. What about this one? Down. What about this one? Down, right? Okay, you want to switch up the time frame. What's the trend on this one? Maybe some people may say sideways, right? Sideways, maybe down. You're probably not saying uptrend, all right? It's not rocket science. Look at the damn chart and ask yourself, is it in an uptrend or downtrend? But it is really important that you are consistent with this approach because once again, when we look at these people's stats, trading with the trend, 8 winners, 3 losers. Counter trend, I mean, this trader did really well in general, so we shouldn't be looking at that one. Let's look at this one, okay? Trading with the trend, 14 winners, 7 losses. Trading against the trend, 7 winners, 5 losses. Let's look at this trader. This trader has, with the trend, 19 winners, 11 losses, versus against the trend, 7 winners, 5 losers. So it is statistically much better to be able to be trading with the trend or in a sideways market versus counter trend. It is a very important concept that you need to understand, but don't overcomplicate it, right? It'd be a lot for me to really break it down, but what I want you to understand is how trends turn, okay? And this was one of my light bulb moments here, and we're gonna talk about, you know, multiple time frame confirmation. How prices turn from inside out, all right? I want you to think about it. The example I give here in this book is talking about Newton's law of motion. An object in motion will stay in motion until an opposing force comes against it, right? And so we can use that same definition attached to trends. And a trend will stay in the direction of that trend unless it comes against a larger opposing force, AKA a higher time frame, right? So the only thing that can stop a 5-minute downtrend is a 1-hour demand zone, right? An opposing larger time frame force, right? It's like the example, I've mentioned it many times before. It's like if you are at a top of a hill, right? There's your top of the hill, here's you at the top of the hill, and you have a tennis ball, okay? You have a tennis ball. You let that tennis ball go down, it's going to just continue to roll down and it's going to eventually stop because there's force against it, I guess, you know, gravity and wind resistant. Eventually it's going to come to a stop way down here, right? But if you put a tennis ball up there and you let go and it comes down and hits another tennis ball, do you think that same opposing force tennis ball is going to stop that tennis ball that is dropping completely? No, it is not, right? It's got momentum behind it, okay? So it's probably going to hit it and then continue on its direction, right? But if you put an opposing larger time frame force, say you put a box, I don't know, a box with weights. I don't know why you have a box with weights, but you have a box with weights sitting at the bottom of the hill, okay? And you let go of that tennis ball. That box of weights is going to stop completely that tennis ball once it hits that box because it's a larger opposing force. So this is how trends turn from inside out. The only thing that can stop a 1 hour downtrend is an opposing larger time frame force, aka a 4 hour demand zone or a daily or weekly demand zone, right? It doesn't mean it has to. Don't ever think, oh, it's coming up to a zone, it has to stop it. No, it doesn't have to, right? But it's a way that you can operate your brain to say, hey, you know what? A 1 hour uptrend coming against a daily supply zone, this is where we might start to see the trend start to break, right? So what are we going to start to see on smaller time frames? So once prices come up into an opposing larger force, we're going to start to see smaller time frames turn from inside out. Still to this day, nobody has proven me wrong on this, as in, like trends turn from inside out. That concept, 100% true. Trends have to turn from inside out, meaning the 1 minute turns before the 15 minute, the 15 minute turns before the 1 hour, and the 1 hour turns before the daily. It has to. It's impossible for it not to. So what if we are going to see confirmation, as in price slowing down and turning from inside out, what we're going to start to see is trend lines being broken and opposing zones being removed. Okay, so we're going to have prices in an uptrend, and then it's slowly going to slow down, go to a sideways market, and then start going down, right? Once sellers take control, right? And this is that transition period of it going from an uptrend, right? The only thing that can stop a 1 hour uptrend is a daily supply zone. So we come up into a 4 hour supply zone. We start going sideways, okay, losing momentum, and then we start selling off, right? That is how markets turn from inside out, from smaller time frames. So it is critical that we understand multiple time frame analysis. Very important. So if we look at this as a practical example, let's go back to that CAD chart. So areas that we really liked were, I think, this demand zone, right, and this demand zone here. Let's just look at these two examples. Let's go down to a 5 minute time frame, maybe a 1 minute, but let's go down to a 5 minute, and let's see if we can start to see these trends, right? So we're in an uptrend. By the time that prices are coming, let's actually look at a 1 minute. Going 1 hour, 1 minute, that fits in the time frame sequences. And so we're going to get into time frame sequences when we start talking about the top-down analysis, but this is the same concept, okay? Prices go into our higher time frame zone, right? It's in a downtrend at this point. On a 1 minute, it's just lower lows, lower highs coming into it. If buyers are going to start to step in now, because we're coming into an opposing higher time frame demand zone, right? This is previously where we identified a large stack of buyers, then we should start to see trend lines being broken and opposing structure being removed, right? Prices will look like this. Whether you have, say for example, this is your higher time frame supply and higher time frame demand. Once prices come into these areas, you're going to start to see structure being removed, breaking momentum lines, removing pivot point zones, and then start going down, right? Same thing for demand. It's going to go here to sideways to start going up. And this is what we are looking for, is that transformation of price turning inside out. Okay, so once again, we come into it and we eventually get buyers starting to step in, sellers starting to slow down, right? We've started breaking downward trend lines at this point. We just got to wait for those buyers to step in so you guys can see this, right? Looks like a loss in momentum, which is good. We go from downtrend to sideways market. That's what we want to see. And then we finally get the push to the upside, right? That's our confirmation. That's how prices turn from inside out. So before we start talking about lesson 3, going over the multiple time frame confirmation setup, we could look at, actually, since we had one more example, let's just look at this one down here. Same thing of when it came into it, right? At the time, we were downtrend going into that supply, and we basically just ranged out, really didn't do anything. And then we started popping to the upside here. Did we? Yeah, I mean, it based out for quite a long time. But then we saw the buyers eventually take control, right? And I want you to understand, this is that trend turning from inside out, and that's what we are looking for, okay? And we're waiting for structure to be removed, okay? So let's talk about lesson 3, the multiple time frame confirmation trade setup. This is the bread and butter. This is everything that you need to know, and I'm going to talk about it. So before we talk about lesson 3, the multiple time frame setup, the markets, the time frames, the indicators and all that, I want to talk about the recap really quickly because we just talked about a bunch, because I want this refreshed in your brain. That's how you learn, okay? Once again, you're here to learn and how to implement this, and so you need to listen to this. Once again, you can get this copy in the description below, and I'll send it to you. But the first thing, remember, markets are dominated by the institutions. There is no best trading strategy, but you need to understand the markets are dominated by the institutions. Us as traders, we are just basically trying to identify where the big money is buying and selling at by using those 4 supply and demand patterns, right? Do I need to show you a picture again? Those 4 patterns. And basically what we're trying to do is just mark out those zones. And now a quality zone will have in common is ideally we want 2-to-1 imbalances that go at least 2 times the size of the base, right? And obviously if it can remove opposing zones and break momentum lines. Very important, as that makes a quality zone. Okay, that was the first part. Let's quickly talk about the recap of the second part. What would we talk about? Trends in Newton's law of motion and confirmation. There are a million different ways to determine the trends. Like we talked about, find one that makes sense to you and be consistent with it. Because once again, as we looked at those stats, it was very important to determine the trends. Remember, we looked at all those people's stats and we're like, guys, it's very important to determine high quality setups because statistically there is a massive difference between the winners and the losers. Number 2, it is also very important to determine the trends because statistically, 9 out of 10 traders that come back to me with my one-on-ones, that when I review with them, they all come back to me with a massive difference between their winners and losers when they're trading with the trend. Okay, so it's very important, all right? So you can see right here how we determine trend, really important. I'm not going to recap that again, but understanding Newton's law of motion, right? Trends turn from inside out, okay? And what are we going to start to see when trends turn from inside out? We're going to see smaller time frames, trend lines being broken, opposing zones being removed. That is confirmation. So now what we're going to do is we're going to go into the top-down analysis. What do you do on a chart, all right? This is the bread and butter. So let's go to a chart, let's say US 30, since this is where we started on this. Let's recap on it, okay? So the first thing that you're going to want to do is you want to begin plotting your higher time frame supply and demand zones. The second thing you want to do is determine the trend, okay? So the first thing that we do, once again, this is going to work for every time frame. I will pop open that chart of depending on which type of trader you are. Day trading, scalping, swing trading, long-term position. We'll look at different examples for each different trader, but those are typically the time frame sequences that you're going to follow. Okay, maybe one is your higher time frame, one is your lower time frame. There is no best magic time frame sequence. This will work for all markets. Okay, so it doesn't matter what market you are trading. Some people will ask me, how many markets should I trade? Personally, I trade 5, but I don't trade 5 every day. I might trade 5, but I only focus on 1 or 2 for the day because the market conditions fit my style of trading. We'll talk about that later. Once again, let's focus on the top-down analysis. So once you go onto a chart, brand new chart, everything's fresh, you find current price and you want to draw out areas of interest. Draw out your supply and demand zones. Draw out areas where you want to be looking for buying and selling opportunities. So you know what? For me, those are going to be the areas that I like on a 4-hour time frame. So what I will wait for prices to do is once prices are inside these areas of demand, I will wait for buying opportunity. Or I will wait for prices to go up into supply, and then I will wait for selling opportunities. Okay? If I want to use the 1-hour time frame, then I will use the 1-hour time frame, and then I will start drawing out, well, maybe this is a pretty good supply zone. It's got a good imbalance. It's taken out structure to the left. It's in a downtrend. I want to look for selling up there. I want to look for selling up there and selling up there. So if prices return into these areas, I want to be looking for selling opportunities. Same thing up here. Same thing up here. Doesn't matter the market, doesn't matter the time frame. What's important is that you have a higher time frame, okay? The second thing is determine the trend, okay? Very important. In these examples, let's talk about one that currently is in play. I think Bitcoin had one earlier this morning. So on Bitcoin, let's have a look at this. I started out on the higher time frame. I don't trade Bitcoin, but for the sake of this video, let's look at it because a lot of people look at it, but it doesn't matter, okay? I had this area marked out. Very nice demand zone. Very nice demand zone. Prices tested it maybe once, twice, 3, 4, 5, 6. It's tested like 7 times. So each time buyers have stepped in, which is nice. So once prices arrive back in here, I will look for buying opportunities. Okay, the trend is like sideways long term, maybe short term downtrend. I definitely wouldn't say it's in an uptrend. Maybe super long time frame, yes, it's in an uptrend. But relative to the time frame that I'm going to be holding this position for, it's more of like a sideways market slash downtrend. So I've identified this area being a very key level. It's a nice demand zone, strong in balance. Okay, it's been tested 7 times. It's told me that these buyers have held each time. So maybe I want to look for buying opportunities. Great. So once prices go into these areas, I then go down to a smaller time frame and wait for confirmation. So in this case, I went down to my 15-minute, and as you can see, it's lower lows and lower highs, lower lows and lower highs. I am waiting, once again, remember that ebook talking about confirmation, wait for prices to turn inside out, right? So what I'm going to see here is once prices touch my higher time frame, so you guys can scroll in and see, I want to see structure being broken on a smaller time frame. I want to see momentum lines being broken, opposing pivot point zones being removed, and strong quality zones being created. What is a strong zone being created? 2-to-1 imbalance. You know, I mean everything that I just list, honestly. You'll notice something about me. Every trade that I take, it's going to have a momentum line, opposing pivot point zone being broken, and a very strong imbalance, right? So if we look at this Bitcoin, it's like, okay, well, if we draw out our momentum, okay, we've blown through this momentum line. Perfect, that's one. Number two, we've taken out this opposing pivot point zone. And number three, we have a very strong imbalance to the upside, right? And so what I'll do from here is I enter on the pullback back into that demand zone, right? Price inside higher time frame demand that's been tested, that has shown strength of buyers. My lower time frame has confirmation. And so what I'm doing is I'm buying the pullback once prices return back into that area, okay? Now, ultimately, you know, maybe this is a trade, now we fast forward, it's either a full loss or it's going to be a half loss, depending on how you manage the trade, right? We could talk about trade management, take profits and stuff like that. So what's important early on, because I'm going to go into another example, is let's look at, say for example, I mean, yeah, we could look at Mexican. This is like a long-term play, okay? So higher time frame uptrend, very good. What do you think the trend is? Up, right? Okay, great. Where are you going to draw your higher time frame demand zones? Probably right here, right? Higher high, higher low, strong imbalance to the upside. That's how I would draw my zone. So if and when prices return back into this area, I want to look for buying opportunities. So I go down to maybe a 1 hour or a 30-minute time frame, right? Because it's in that time frame sequence. And what are you going to start to see prices do when prices touch our higher time frame zone? You're going to see it slow down. Prices turn from inside out, right? So prices go sideways, go from down to sideways, and then eventually we get that pop to the upside, right? Breaking structure. So it wasn't until this move here, very strong imbalance, that was our confirmation, okay? And so what we're trying to do from here is we buy the pullback back into that demand zone. We wait for the prices to pull back, we enter the trade there, and you might have your stop loss probably below all that structure or maybe down below here, depending on the type of trader you are, right? And then some people will get out at 1-to-1, 2-to-1. Some people will get out at, you know, maybe opposing structure over there, which is fine, I think. You could start adding into your position. How are you going to manage the trade? These are very important concepts to understand. In fact, it's actually what separates the winners versus losers, in my opinion, is how do you actually manage the trade? And that's why I've uploaded 2 videos, one talking about risk/trade management. I will pop that up on the screen right now, but I will also have it in the description of this video for you to watch afterwards. But then the second, talking about mechanical trading, because I love mechanical trading, but at some point you have to use discretionary trading. And I really do a good job at breaking it down of what are the 2 differences and the mistakes that people make in each one. Very important concept for people to understand, mechanical versus discretionary, and when to use it, because you can't approach the same setup every single market. Because actually, I'm going to look at this. Members watch list. This was a concept that I talked about. Very important that you guys listen to this. Very important. This was a picture that I was sharing, all right? And we were actually talking about, the different market conditions, okay, during this time. And this is why I scan 5 markets and I find which one works best for me, okay? So this is the S&P and this is gold, both daily time frames. Look what the S&P is doing. It's rallying nonstop. During this time of prices just rallying, what was gold doing? It was doing this. It was just based out extremely tight range, okay? These are 2 completely different markets, and you can't approach each market the exact same. You can't do it. You can't just go to a chart and be like, okay, yep, it's very mechanical. I will take it because my mechanical system says so. I need to take it, right? No, okay? There has to be some type of discretion in understanding how you are as a trader and how you perform during different markets. And this is why you have to adjust your trading every so often, right? And adapt to the current markets, because how do you perform during, this is why reviewing is so important. Like when you're reviewing your trading and you see, hey, like you circle all your drawdown periods throughout the year and it's like, okay, I had a drawdown here and here and here. Okay, so you analyze each time of those drawdowns. So say, for example, your equity curve looks like this, right? I don't know. Let's just say like for that example. And then you analyze, okay, what was I doing here during this time? What was I doing here during this time? Versus, what was I doing here during this time? And you start analyzing like, hey, what were the markets that I was trading? Was I buying gold while gold was falling nonstop, right? And so you identify your strengths and weaknesses and you notice these certain things for each individual trader. Some people might trade sideways markets really well, and some people might only be really good at trending markets, right? So it's important to find your preferences, and that's why I say I scan 5 markets. I'm not trading 5 markets for the day, but I'm scanning 5 markets, and then I pick my number 1 or number 2 markets, and I just look at those, and I go, okay, these are the 2 I'm looking at for the day, right? I'm not actively trading 5. I'm not actively trading 20, but I'll scan through to see what I like in the market and what I don't like, okay? I got sidetracked right there, okay? I got sidetracked, and I apologize about that, but hey, I appreciate if you guys like this video so far. Really good stuff, really good stuff. I get carried away. I'm in the flow, I'm start going at it, and I go, man, this is a really important concept that they need to understand if they actually want to be profitable at this game, because you're going to see on social media people blowing up 90% win rates. Personally, I don't know a single trader that trades at 90%, okay? I'm just saying. Let's continue. Multiple time frame confirmation. Let's lock in for a second, okay? Very important. We just talked about that, right? Buying that as a buy setup, and then that was our confirmation, right? And so I want to look at a flow chart. I want to look at a flow chart now, because this will keep you out of trouble. And in fact, I will send you this. I will send you this for free. And it's the same thing with this setup and stuff like that, and different setups and how to take profits in this ebook and stuff like that. What separates the winners versus losers, it is really important, right? But, the flow chart, I don't mind giving this stuff out for free. People come to me about how to actually implement it. That's a different story, right? Helping traders become consistently profitable, turn them from new or struggling with direct coaching. It's very important, right? Creating a trading plan, right? Very mechanical way of doing that type of stuff. And so like this could be, let's look at this one, for example. So like, I'll send you a picture like this in an email showing you my flow chart. And this just kind of guides people about how to perform a top-down analysis, okay? First thing you do, identify supply and demand zones, okay? Identify key areas of interest of where you want to look for buying or selling. Second thing, determine the trend. And then you kind of flow through it. Okay, is price inside higher time frame zones? No? Okay, can you trade this setup? Do you allow yourself to trade this setup? No? Okay, no trade, right? And so yes, we are inside a higher time frame. Do we have a quality setup? Yes, we do. Okay, take the trade. No, we don't take the trade, right? And so it keeps people out of trouble, okay? And I'll actually, I'll send you that in an email if you decide to get that book. So it's really good stuff. But I want to get back on track right here. I'm sidetracked right now. And so when it comes to all these time frames, guys, after 12 years of doing this, I'm about to share with you one of the holy grails, okay? If it ever comes to a setup, and like everyone in my private group that works with me, And they all come back to me and with the same thing. Make sure that these zones are accomplishing something. Make sure the zones that you trade at are doing something, right? They're coming to you with their resume. 3 most important things. I've done countless videos talking about this. I've done countless statistics, breaking down stats and reviews on this, and every zone breaks a very clear structure momentum line. Every zone removes an opposing pivot point zone. And number 3, strong 2-to-1 imbalance. If there was ever a holy grail in this strategy, it's making sure each setup does those 3 things right there. So you're waiting for prices to go inside your higher time frame zone, and then you're waiting for confirmation, right? We could talk about 1 time frame setups for a second, talk about confirmation 2.0 setups. Okay, that's when you're trading with the trend direction on the higher time frame. You don't necessarily need price inside higher time frame, but you need to make sure that prices are trading with the higher time frame trend, and then you enter just straight up buy setups on your lower time frame. You don't need necessarily price inside a higher time frame zone. An example of this would be, let's just look at a trade review from someone. Tyson, shout out to you, Tyson. So in this case, higher time frame uptrend on the left, you can see it's just going to the upside. So he's looking for buying opportunities. And then it's the same thing on the lower time frame. Just lower time frame, very strong imbalance to the upside, taking out structure pivot points, breaking momentum line, and 2-to-1 imbalance. And then he's buying the pullback. Then you got to start considering how much time is too much time. What about the arrival? What about news events? Stuff like that. All very important stuff to consider, right? But it's a lot to go into this video. I want to talk about journaling because as you've seen, I want to look at trader stats now. Back testing and journaling, because it's the key difference of what determines a quality trader, a profitable trader versus a non-profitable. And so once you have 30 to 40 trade reviews, I sit down with you and I look at all of your trades and I look at, about the strategy and things that you notice between your winners and your losers. And we figure out, what you like and what you don't like and what the stats are between the winners and the losers, okay? And, a lot of the traders come back to me with the same stats, right? But it's different when you put in the work versus you just following this video and blindly following, because a trader that actually takes these trades and reviews and figure out the stats is prepared mentally, right? He can handle 2-3 losing trades in a row. Versus another trader, he's going to go jump to another strategy after 2 or 3 losing trades in a row. You know what I mean? So this is why, journaling, back testing, journaling, reviewing is so important, because I don't trade the same as I did 3 months ago. Completely different. Not completely, but the way that I operate is different from 3 months ago. 6 months from now, I'm going to be trading different from how I trade right now, because the markets are always adapting. And so you have to always adapt with the current markets, right? Better ways of taking profit, managing your trade, what's working, what's not working, right? Things adjust over time, so it's important that you adjust. I thought I've done a really good job breaking down the whole multiple time frame confirmation trade setup, okay? And like I said before, if you want to get this ebook, that will be in the description below. The videos that I mentioned earlier talking about discretionary trading versus mechanical and risk/trade management plans, that will be in the description as well, including my tips playlist where I break down the entire supply and demand strategy in more videos, okay? I really appreciate if you guys like this video, subscribe, and if you have any questions, you can always reach out to me on social media at MoneyballAustin. If you would like to know the 4 setups that I trade every single day, click above my head right now for that video. These are the 4 setups that I trade every single day, and I show you how to implement them in the markets. I'll see you guys soon. Cheers. Bye-bye.